Well, good morning, everybody. Welcome back to another live stream. Hope you're all doing well. Hope you're getting ready for the holidays. I know I certainly am. And we are coming in with the last pre-Christmas stream. So we won't be streaming tomorrow, obviously, New Year's Eve, and then we won't be streaming on Christmas. But I do want to wish everybody a Merry Christmas. Thank you for watching the show, for being a part of the show here throughout this year. I know there's a lot of you guys who have watched for years, like you've watched for a long stretch of time. And I do really, greatly appreciate it. And happy holidays to you. I want to show you a cool chart. We just got done finished building here this morning. We're taking a look at specifically the new real yields historical chart within EdgeFinder. Now, if you don't know what real yields are, if you're a currency trader, you really should. They are pretty useful. Real yield is essentially the idea of taking interest rates offered by a country minus the inflation of that country at the same time. Now, why would you want to do that? Well, you want, if you're investing in bonds of a particular country, remember that all countries have some type of inflation, right? So currencies lose value or gain value depending on what's happening in the world, faster or slower. And so if we're taking a look at the US, right, what we can see here is that this yellow bar is showing you the real yield over time. So the real yield that you would get buying US bonds, just as a rough general idea, not necessarily using the 10-year yield data, but we're using just the nominal Fed funds rate, okay? When the US was offering 5.5% on, their Fed funds target rate, while inflation was around 3.1%, you're talking about an effective 2.4% yield after inflation. It's pretty good, right? So that's what we're looking at here. We're looking at adjusted or factoring in inflation. What are your returns investing in different countries? You have to remember that a lot of the flow of the FX market is all about capturing yield, people moving currencies around to buy treasuries. Massive, massive conversation for us to have around what's going on with Japan, right? Japan is talking about hiking rates, but people think that they're behind the curve. The Japanese yen is very weak. We could look at Japan, and what you can see here is that they have a very negative real yield, although recently it has been changing as their inflation has been slowly coming down in red here, while their interest rate has been slowly coming up. So as you can imagine, if the interest rate is coming up, but it's coming up at a at a rate that the net difference is now equating to less or more real yield. I know it's kind of confusing, but the idea here is that real yield in Japan is slightly increasing here recently. So anyways, this is definitely not a super beginner concept. But for my friends who are macro fans like myself, this chart is really exciting. It's really cool to have within the EdgeFinder. So you can actually click around and see different yields being offered by different places. With the US, for the most part, we can go to our heat map, and this is our current, real yield. What you can see here is that the highest real yield currently is the US. right? With 2.7 inflation and 3.75% interest rates, even though the Fed is cutting interest rates, the real yield on the US dollar is still higher than some other places. Like look at Japan, right? Japan's still at minus 2.15% real yield. Second place would be GDP, which has inflation of 3.2% with interest rates at 3.75%. So, and this stuff matters tremendously because at the end of the day, it is one of the longer term guides to where FX prices go, is where there is real yield. Just think about it, right? When people are moving money around, they're generally going to go where they can get some good real yield. Pension funds, hedge fund managers, they're going to navigate in the direction of where positive yield is at. I'm up 4% on my trade. Thanks, Nick. EdgeFinder really helps. It certainly does. EdgeFinder it's no holy grail, but what the EdgeFinder does is it adds confluence to your trades that you may never have had before. Like my own trading has dramatically improved through EdgeFinder because before I had EdgeFinder in my trading, I was still using these things, but trying to do them all in my head and manually was a ridiculous task. There's no point, in my opinion. If you're going to use fundamental analysis, you have to use tools, because without tools, you're trying to do something off memory that you really should not. It's like trying to do math only in your head when you could perfectly well use a pen and paper. Some people can do math in their head, but most of us, most normal people, need to actually do math on a piece of paper or map it out so that we can visually see it and go line by line. That's what EdgeFinder does. EdgeFinder is it's like saying you want to use math to come up with the answer to a problem, but you're unwilling to use a pen and paper, right? You're like, oh, I can just do it in my head. EdgeFinder maps out visually what we're talking about when we think about fundamentals. So anyways, we've got some good readings here on the EdgeFinder, NASDAQ, Dow Jones. So far, we are entering into what is considered the Santa rally period. What I mean by that is, historically speaking, between now and I believe it's January 5th. I'm looking at my calendar really quick. January 5th. I believe that's right, because we only have, let's see, today, and then trading will be very, very quiet. For FX, I think it remains open like most days outside of Christmas and Christmas Eve. I can't remember on FX side of things. Anyways, the stock market will have some downtime. The Christmas rally or the Santa Claus rally is typically between now and like the first few days of January. Okay. I think it's the first 2 or 3 trading days of January. I don't know exactly when it is, but it's between now and like the first few trading days of January. Historically speaking, it is the strongest period of the year in terms of average stock market performance. And in a very interesting turn of events, the last 2 years have actually been not good Santa Claus rallies. I was listening to something. So in the last 2 years, we have had negative Santa Claus rallies, or I guess no Santa Claus rally. The Grinch stole Christmas, whatever you want to call it. For the last 2 years, we have never had 3 years in a row. In US stock market history, we've never had 3 years in a row where the stock market has declined 3 times in a row, back to back to back, year by year during the Santa Claus rally period. So we could be setting some history if we were to get some disappointment in the stock market. It certainly could happen, but I think it's like 70+% of the time during this time throughout all market history for the US stock market, 70+% of the time, you are higher in this period. Okay. And I believe the average return is somewhere around 1.2% for this period. Now, when we talk about things like this, sometimes people get real excited. They say, oh, okay. So we're talking about a 70% chance that we're going to make 1.2%, right? You have to be careful, though, because people get real excited about these things, just like they do with everything in trading. They see 70%. They say, okay, plus 1.2%. And what they say in their head is, no, it's more like 95%, right? They That's what people do. People, when it comes to trading, they ignore statistics and facts and probabilities, and they tell themselves what they want to hear. 70% means there's a 30% chance that you could have a down market in the next few days. It's higher probability that you're going to get an up market, but it's not a certainty. And people, like, I can say this, I say it every day on my YouTube channel, right? Trading is all about educated guesswork, probabilities, but there's no certainties to it. So when we talk about something like this, do I think the path of least resistance is higher? Yes, the statistics would say we probably move higher into the year's end. But there's no guarantee. By the way, 1.2% on the S&P 500, where would that put us? 1.2% would put us just shy of the 7,000 mark on SPX. If you had a real good Santa Claus rally, maybe a slightly above average Santa Claus rally, we would be talking about hitting that 7,000 mark on SPX. I wouldn't rule it out. I'm not necessarily, again, I'm just not fighting the statistics. I think that, if you're standing here and you're saying like, oh no, we're going to definitely crash. I think if you're bearish, right? If you're bearish, maybe we see this move and then we see maybe some selling into the New Year's, right? That's a little bit more something to think about. But most years, right, the statistics don't lie. The statistics have shown most of the time you get an up market into year's end. So I wouldn't fight that personally. I'm not going to. I'm not going to short the market, certainly. Am I going to chase it? No. But I will say, if we do see sort of a surprise down market move, I probably will rejoin some of my positions that I've had on. I like the Russell. I talked about that a lot in recent videos. So if I go here, Russell 2000, you can see we've had a nice bounce back from this area. A little frustrating because I was right there, man. I was ready for the buy, setting up the trade, mapping out my risk management, and certainly would have loved to have gotten into that trade, but just missed it. So it happens. Sometimes at the end of the day, I can't chase it. I'm not going to change what I'm doing. I'm going to wait for it. If it comes down into this area, I like the Russell, but if it doesn't come into play, then I just reset and wait for the next setup. There's no point in being bearish. Either you buy or do nothing. I'm with you on that. Like, I don't see the bearish setup. I think if you're bearish, like, look, there's times to be bearish in the stock market. But in my personal opinion, it's not when you're in this kind of market. This is the hardest market in the world to short, because when you're in melt up mode, you can just trick yourself over and over and over into thinking the top is in just for a new top to show up, right? I think that my personal opinion is that if you want to be short the market, the time to be short the market is when the market is actually flowing lower, right? I find it to be an incredibly tricky trade. It's not something I do very often. I'm very rarely short the market because the market very rarely in recent years has been down. Now, I'll tell you, if I was to go through 2022 again, shorting in this market is still ridiculously hard, right? Still ridiculously difficult, because what happens is you get these violent up moves even in the down market, right? And those violent up moves are very difficult to short. So anyways, if I was to be bearish, it would definitely have to start with price action actually showing signs of bears being in control. But right now, bulls are just full blown in control until proven otherwise. Now, if you're a bear, here's what I think the bare minimum. Oh yeah, we have GDP numbers. Let me check those. See if we got anything. It is preliminary GDP numbers, so we'll see if that has any impact here. Whoops. Hold on, EdgeFinder, keep that up. Okay, so preliminary GDP numbers came in better than expected, 4.3%. Wow. Core durable goods came in lower than expected. However, preliminary GDP price index came in higher than expected. Let's take a look at how markets are reacting. Dollar index here in response to this is higher, stronger GDP statistics. We also had stock market reaction, pretty mixed. Let's see, gold not loving the stronger GDP statistics. let me check yields. I feel like right now everything is about yields. We're going to bring in Chris Pulver here in just a second. We can see what he has to say about this. We got preliminary GDP numbers coming in here, better than expected. Again, with mixed in there a little bit softer durable goods orders. But yeah, we'll bring in Chris Pulver, see what he has to say on it. Here he comes. Hey, Chris.
Good morning.
Chris, would you agree that everything is about yields right now? I feel like yields are just so important.
Well,
specifically Japanese yields.
Well, they say is the government will keep spending money until the bond market takes away the keys. So
That's a good point.
Ultimately, I mean, yields will matter. They haven't, because U.S. yields have been really sticky. But something we said this yesterday. Something is happening here. I think that at some point this is going to matter. I don't know if it's the the potential breakdown of Japanese yields that will all of a sudden resonate through the currency market. Will it drip over into equities? It's very possible. Is it? I mean, like we discussed, that was Liberation Day, which obviously was a huge volatility event for the markets. Technically speaking, it's like if I saw this chart not knowing it's a bond yield, I would think like, all right, well, we're probably getting overbought, possibly a reversion of some sort coming back into some balance. Looks like a strong uptrend. It's just what type of support do we get? But when you look back here and you realize, okay, so every time this thing has fallen, we've seen some major moves in currencies. We've seen some major moves in the equity markets. Yeah, I mean, this would be a 10% correction in the equities market. This would be, I'm trying to think, this was a 6 to 7% correction, 2023. So yeah, I mean, I mean, U.S. yields matter because they're sticky. We've made all of our cuts. I don't think the Fed is looking to cut until probably April or June of next year. From what I know, probability wise, yeah, we're still at a pause for January, and then maybe March, but it's really close. Maybe an edge out goes to April, June. Like, I mean, Fed's already priced, or all the Fed stuff's been priced in. So they proceeded with that additional cut in December, and now it's paused until pretty much Powell's out. But bond yields haven't changed. I mean, that's what's crazy. We've cut 175 basis points on the short end, and the bond yields haven't changed.
So check this out, Chris. If we can show my screen here, going exactly on where you are right there. I was just about to say something on that. I asked you yesterday, like, this is a confusing concept, so get ready, everybody, strap in. This is a little bit of a tricky concept. Currencies and yields are no joke. It's funny how like Forex is like so popular for beginners, and yet Forex is like a ridiculously complex market. Anyways, because it goes right into like yields and all that stuff. Bond market is no joke, and it's a super important market. Anyways, we talked about this yesterday. Japanese yen weak, yet JGB's yields going higher. And by the way, you just brought it up with the US dollar. Same kind of concept. You have a weaker USD, yet yields remaining elevated and even trending higher. So why is that? Well, I did some more research because I can think through this stuff if I sit there, but I have to think every time. I've done this for 10 years and I still have to think like, okay, why is this going on? Well, my research last night basically kind of showed me that through the help of a little bit of help from Grok, currency moving lower while yields moving higher oftentimes signals uncertainty about that country's stability. And so, because what we can see here, like take US and Japan, by the way, both of them are experiencing this. And maybe, guys, this unlocks why gold is skyrocketing. Okay.
Right.
So check this out. You have currencies weakening, Japanese yen trending like weak, despite them hiking interest rates and probabilities for them to continue to hike interest rates. The market thinks Japan is behind the curve with their rate hike cycle, and thinks, and also at the same time, the US, the dollar has been weak for the most part, and yields have been moving higher. So yields moving higher is the bond market saying, we're not buying your debt from you unless you give us higher yield. Right. And the currency moving lower at the same time is people moving away from those currencies and trying to save face, try to diversify, spread out from the risk of owning that currency. So it's sort of a breaking in the yields world, because you have people saying, national debts are super high. Like you think it's high in the US, Japan is way worse.
Right.
Japan has massive national debt. And so people are saying, we're not buying your debt unless you give us higher yields. And at the same time, people are saying, I don't want Japanese yen. That thing is a depreciating, rapidly depreciating yen right now. And maybe something shifts, Chris. I mean, we saw a little bit of intervention sort of stuff last night. I'm not sure if you saw that. You have a yen strong here this morning, perhaps a little bit of that going on. But I thought that was worth mentioning to the audience because we talked about it yesterday. Basic idea is yields are higher because investors are saying, I'm not buying your debt from these national debts that are very high. Chris is going to show us a really cool chart in just a second. And at the same time, the currency is depreciating because people don't want fiat currency. They're scared of it, and for good reason. And so where are people going? Gold's up another 1%, man. This thing just keeps going because they're getting out of currencies. So go ahead, Chris. I just wanted to jump in there on that one.
Yeah, just as you're talking about it, just brought up a world map on debt to GDP ratio for now. And Japan, as you're talking, 237% debt to GDP. Now, Ray Dalio has a whole book and a whole tour about the, changing world order. And basically every empire has fallen at like a debt to GDP ratio of 120%. Well, US is 124. So, I mean, I wonder, does this give us room to run to 200 plus? Or is it just all running its course? And I mean, this can has been kicked down the road for decades at this point. But I just think that there was something odd about COVID. Like 2020 just accelerated everything. And this year accelerated the AI positioning of just, I mean, when you saw the whole world shut down in 2020, everything felt like this is an inflection point, like global economy wise. Obviously things came back to normal and everyone was desperate to get back to normal. But nothing's been the same. So I say get back to normal, but I don't think for most people it's been the same since 2020. Something's been shifted into life. There's been, harder times, there's been struggles, there's been great time. I mean, either way, like stuff has changed. It can't be sustainable. I think, I mean, I'm not a bear, but it's like, this can't be sustainable. And I was having a conversation about this yesterday on gold and silver. I mean, look, I look at these charts technically and I'm like, you know what? I'd love to buy lots and lots of dips on gold and silver. I almost wonder if we could have flat, maybe even bearish equities prices, and we could still see gold and silver do great. I mean, a couple of weeks ago, I was like, I don't know if that's going to be the case. I think everyone that's cheering on gold and silver is going to be in for a rude awakening when maybe everything goes down together. But maybe there is like this, I don't know, maybe the FOMO was coming in. Maybe,
I mean, I gotta say, I think just to jump in on what you're saying there with gold is, I think that if you're talking about a logical bear case that, I mean, I haven't seen one in a minute. We've talked about this constantly. It's like, I haven't seen like a real potential blowout thing in the market for a while. I gotta say, the whole yield spiking thing, with Japan kind of leading that charge, to me, I wouldn't say, that's not enough for me to go out and get short on the market, but it is certainly a logical thing. We know, studying history, that typically big market corrections, they start with liquidity dry ups from rate hikes. That's like the classic story of major, and 2022 was a weird one, as you pointed out, with COVID. But it was still, I mean, it was still a market crash. You're down almost 40% for the NASDAQ. So it can be a real thing.
Yeah. And so just thinking of gold and silver, I mean, it's hard for me to take profits after a 3-year campaign trade and just jump right back in with a full position. That is one thing I can't bring myself to do right now, is at these levels with a new breakout from yesterday, a new push today, and just be like, well, I had 5%, gold and silver. I'm going to take another 5% right here at the top. It's like, I'm not going to do that. What I am going to do is, I have positioning, and I'm kind of lucky here, but I have a lot of option positions running on GLD. I have option positions running on SLV. I have bought shares that I showed this in the alerts on CEF. We got filled. If anybody bought CEF with me for my pulver alerts, we got filled there. We had a pullback. We got filled around that 38 handle, and we're getting a nice little chunk to the upside. This thing's up, $8. per share, which percentage wise is not too shabby. I think we bought like a 37.50 or 38, but it's up 21%. That's not bad at all for the last couple months. Same thing here in PHYS. We got filled here. This thing is up 10%, and that's a gold and silver. So a little bit less volatile, but I mean, I'm starting to get the exposure back. It's just, I was wondering, are we going to see a correction? But Nick, are we going to have a correction on gold on its way closer to 5,000? Then I'd be thinking, well, I'd like to see a pullback now. It's like, maybe we don't get one. And it sucks to think like this is a chart that I've got to chase. This thing is up over 50% since October, 54% since October. So it's silver. It's like, this isn't a meme stock, dude. This is crazy.
Yeah. Well, and the thing is, Chris, here's a weird one for me with gold and silver. I think gold and silver have been signaling something for a while that, people, myself included, have sort of overlooked to an extent, where it's like, okay, can we just acknowledge this is not a normal move? Like this is something's blowing out. Something is going on here, right? That's a crazy move. Look at silver. Silver, couldn't believe
that is nuts, man.
Looked at it year to date.
Yeah.
Do you guys realize 140% gain on the value of silver across the world? I mean, that's insane in 1 year. So, I feel like the precious metals are telling us something. And when you actually understand yields and what's going on with Japan and what's going on with the US, I feel like it's all telling the same story. It's telling people are worried about national debt. That's exactly for the gold bugs who have been saying it for 25 years. Right. That's the story they've always said, is it's going to end up with some sort of national debt circumstance. And Chris, if I'm not necessarily saying I think that's 2026 is going to be the worst bear market of all time, but if we were going to talk about a true, really, really bearish market, I couldn't think of a more bearish environment than the national debts of the world blowing up.
Sure. Are we talking 2008 again? Is it like, or worse? And again, it's hard to not get caught up in that narrative.
Right. I think you have to be careful with it. I'm not necessarily saying, all right, sell everything and get super bearish.
And also remember that the whole world is in this together. So whether you like it or not, if everyone is in debt up to their eyeballs, they're all in it together, which means they're all going to try to figure this crap out together. It could be, I've thought for years, like it could be some, some creative accounting practice, which is like, hey, look, here's a new currency that we just created, and it absolves all this global debt, and we're going to start from scratch. And it's like the Great Reset, and it could be crazy disruptive, but also just hundreds and hundreds of trillions of dollars, like poof, just disappear, because the world has to keep functioning. It's like the financial system is so big, so massive. I would like to be confident to think that it's kind of too big to fail. You've got too much at stake to let the global financial markets fail. Certainly here in the US as well. Like, we love our financial markets. We want nothing but them to go to all-time highs all the time and never pull back. And we don't really have proper corrections anymore. It's like everything seems highly manipulated. Everything seems like a 1%, 2% dip is aggressively bought. Outside of this last November, December correction of just under 6%, outside of the Liberation Day panic, everything was like less than 2% dips. I'm pulling up the chart here. This is SPY compared to gold. If we go back to 2015, it's crazy. The SPY versus gold value. It's like gold is, basically the SPY is at like a 10-year low relative to gold.
And that shows you what the real, actual, you talk about it all the time, Chris. You talk about like the real feeling, state of the consumer of the world. Yeah. Here's the stock market's performance in terms of, fiat currency. What you had there was basically stocks versus fiat currency, losing its value too. Right.
Exactly. So
very interesting.
You put that in value of gold. It's like, and we mentioned this in some sessions earlier this year, but if you think about your life relative to, do I own gold? Like it is something that I have, whether it's exposure to gold, whether it's ownership of gold, whether it's gold or silver, or I would lump Bitcoin in there if it comes back and hits all-time highs. But if there's something that we hold that is actually maintaining a purchasing power value, then it doesn't feel so shitty. But it's like when everything about our purchasing power is weakening every single year, or stuff around us gets more expensive. I mean, I don't think prices are necessarily changing for the better. Like everything, if it can stay expensive, it will be expensive, and companies will continue to pass on cost to us. And I'd never seen this before, but the is it Sneetches? It was a Dr. Seuss. Yeah. Anyway, it's right here, the Sneetches. It's like a 10 or 12-minute video. You can watch the story. It's narrated, and it is. I've never known like this was Dr. Seuss story, dude. It is the perfect example of capitalism, where it's like, you know, one Sneetch has a star on its belly, one doesn't, and then one says like, we're better than you, we never want to socialize with you, and then one guy comes in and has the ones with no belly or no stars in the belly. He in the machine and it puts it on, and then the ones that want it off, it's like, it's just the constant revolving thing. It's like my takeaway from that is like, consumers don't realize how powerful they actually are. So all this stuff is like, everything's expensive. I get it, but we do have the power of choice. And it's like, if collectively we just stop buying things, we change trends. And so, but again, it's like, we won't, because we're constantly being fed like, you need this, you have this, you're missing out, blah, blah, blah. Or it's a status thing. Like, I don't know. It's all the stuff, and it's big picture. But at the end of the day, I don't know what the global financial debt system looks like, other than gold and silver seems like a great trade. I don't know if I'd go all in. I think if you think that that's the greatest trade for 2026, good luck. Expect a lot of volatility. I don't think it's going to. I don't think we can see a chart, especially silver, man. I don't think we can see a chart like you just pulled up. You pulled up a monthly chart, didn't you?
Yep, monthly chart. 140% year to date.
Yes, and on top of that, we are getting a run of this last little dip we had back here in April, which was Liberation Day. We have 1, 2, 3, 4, 5, 6, 7, 8 ridiculous candles in a row, and certainly the last 4 have been nothing but just straight up. I mean, just the last 4 months of candles.
It's hard to say that's not giving us a strong signal. Look at, just as you were pointing out, look at that monthly chart. Most of the time you get balance, you get back and forth, you get waves. This, you know, this to me starts to usher the words like black swan, right? Very rarely do you get markets moving like this, up or down. You don't usually see this. So I think you have to look at this and say, okay, what is going on with the precious metals? And you know, in my research on that, it keeps bringing me back to yields, which is, you know, if these places are cutting interest rates, why are our yields rising? It's rising because people are genuinely worried about, you know, national debts, which brings me right back to precious metals. So, I mean, I agree with you in the sense that this is a hard one for me in terms of longer term positioning or investing in precious metals. I'm not doing it up here, right? Like I feel that sentiment alone, I do think that being in precious metals is a better place than fiat currency. I pretty much always think that. But from a managing my portfolio standpoint, if I'm buying something to hold it for a longer period of time, I do like to wait for people to kind of give up on it, be a little bit more bearish on it. Like, this is hard for me to say like, okay, I'm going to go out and buy gold. Now I have obviously a trade on, but trading is different than longer term positioning, right? So like, I'm just, you know, trailing a stop here. I've had a nice run, and I'm going to keep trailing this thing if it wants to keep running. But longer term, you know, this is where I do still think, you know, listeners, I know we sound very, very bullish on precious metals, and we have been for some time, but there is a difference between trading and investing. Trading, I think gold and silver are just, you know, they want to keep running. If they want to keep going, do their thing. Longer term, got to be a little careful with them.
Yeah, I think if you're in it right now, enjoy it, trail it, try to be as disciplined as possible. It's, you know, it's okay taking profit at any given point. I mean, look, Nick, you do a great job just trailing stop losses, putting it underneath candlesticks. A lot of people also like to use moving averages. You could use like an 8-period moving average. I can just throw that on my chart right here. Change one of these really quickly. I'll change my. Let's go 21. I'm just going to change this to like a 8-period. If I go 8-period and tighten that up, this is a daily time frame. Okay, so I just went from a 21-period to an 8-period, and that would put me back about 2 days. So today's candle, yesterday's candle. So just below that, we have a stop loss at 66.40. Well, we're trading at 70 and change. The tighter I get, any type of fluctuation, any type of hiccup or pause, you might get tagged. But it's like, at least right now, you're below a couple candles. We could go sideways for a day or so and still keep going higher. We could rip obviously higher. But that's it. Like, it's okay to be disciplined on taking profits and enjoy the run. I look back, it's like, this is what I think is very possible. And this is why I would just warn people, like, there's going to be volatility. I mean, the last time we had a crazy run to all-time highs, it fell over 70%. And it took years to do that. But once this top was in, we didn't regain that top for over a decade. And I don't know if all of a sudden the whole narrative has changed where everyone wants gold and everyone wants silver. Maybe this is a faster cycle, but I still think it comes with the same type of, at the very least, when this thing is done with a rally, it's going to put in some type of high, low, lower, high, lower, low. And I'm, as ready and lined up as anyone else to line up some type of symmetry swing, line up some type of correction, and position for that. But in the interim, as this is going higher, trail and enjoy the run. And if we're having this conversation, in 3 months, Nick, and we're talking silver is pressing, $80, pressing $85. I mean, I don't know. This could be just like can't miss. You can't go wrong with silver. And maybe we just have a ridiculous run. I mean, I think I had this blue line up here at 91 because I measured this as a range. Now, let me take this. I'm pretty sure this is what I did. So take this low to high right here and double it. And there's your symmetry. So if we're heading there based on a measured move, it's like, okay, I could see that. And that was surprisingly enough, the bottom in 08 to the high in 2011, a decade-long trough that took a long time to carve out. But, we started to find some support in 2014, or I'm sorry, I guess 2014, 2015, stayed there through COVID. But, I mean, just like so many trades during COVID, if you bought it, you took a good trade. Because it's up, 600%, 500%. It's not too shabby. So anyway, I just have a measure move up to 91. That's on spot silver. So we'll see if that holds true. But some pullbacks along the way, like I'll be buying the dip. Previous resistance to 2011, 1980 highs at $50. I'm buying the dip. If I don't get it, I have some participation, and I'll enjoy the run like everyone else. I just, in hindsight, wish that I had more on the position. That's all.
Sure. But so here's another one for you, Chris. Obviously, everywhere you look right now, the big question is, are we going to get some kind of Santa Claus rally? This is seasonally strongest period of the year. Looking at the S&P 500 between now and the first few days of January, I believe, and this is just rough statistics, 70% of the time you're higher with a average return of around 1.25% approximately. Now, for listeners, I explained this earlier. This is no guarantees, right? So this is probabilities. Like if you were to roll the dice, you have a 70% chance of hitting around a 1.25%. And I'm not sure. I would actually love to follow up with this statistic and say during the 30% of time, what is the return of the downside? And so, but I don't have that stat. So this is what we're working with, historically speaking. Do you think there is the possibility? We have had 2 years in a row where we have actually seen the two past years, we've seen negative returns during the supposed Santa Claus rally period. You and I know very well, we were watching the Fed meeting last year during this. We saw a very sharp drop off, kind of threw a wrench into the Santa Claus rally, shook the market. This year, I can't help but to keep coming back to what I've been saying, which is you have this thing happening with Japan. And, I think also the US yields have been very correlated with Japanese yields. So if they're rising, you could have a little bit of trouble. Who knows if, we've talked about this many times, Bank of Japan loves to do some yen shopping during low liquidity periods, which there's a low liquidity period during this week. So I don't know. Could that be, could the market's feedback where they're basically revolting against the Bank of Japan's rate hike and slow, basically the market seems to be saying, you guys are behind the curve. You need to be hiking faster. And I don't know, is there that possibility that the Bank of Japan kind of steps forward and slashes the rally? Or do you sort of kind of say, all right, I think we yield to the stats and look at this fresh in 26?
I think I mean, right now we're trading at 68.78. We've got all-time close highs around 69.01. There's something that just seems like very headline grabbing and posterizing at the 7,000 SPX level that I think that the market might want to make an attempt to try to find it. I mean, so this one thing that has me a little bit, and again, if we have a melt up here, Nick, like remember, it's Christmas Eve tomorrow, man. So like Christmas Eve, Christmas Day, we have one more day of trading this week because I think Christmas Eve is partial trading. But anyway, and then we have New Year's next week. So if the market isn't disrupted too badly and we continue to drift higher, one thing I wouldn't want to see would be the type of rally we saw right after that October sell-off, which was that very terrible, like low market breadth, Mag 7 only rally led by very few stocks. And we hit all-time highs and then we started our correction. So if we do something similar where the market is just kind of inefficiently working its way higher. I mean, yesterday the market was up 13 points, like very quiet. I mean, if it has that type of price action day to day for the next 2 weeks, and we're sitting here testing, 69.50, 7,000, fine. But I would be thinking that is likely going to be led with some type of Q1 volatility that gets us back to some type of reality check. We mentioned this, like a 5 to 10% window of some, highs and lows, I think is very normal for 2026. Obviously, I'd be really eager to buy dips at the 10%. If we get worse than that, 10 to 15, I'd be still willing to buy. And I don't think the story is going to shift to like, here it is, Nick, this is the top, this is the end of time. It's like, I don't think the story shifts to that. The market might want to think that, or the headlines surrounding it might want you to think that, but I don't think it's that extreme. I think, I don't know. I mean, I feel like the Bank of Japan would possibly just stop, like they just stop raising rates. But I don't know what that does to the yen. I don't know what that does to the Nikkei. It's like, would they not be celebrating new all-time highs in the Nikkei? Would they not be pushing that as well? Versus like, what are they doing with the currency? I mean, I don't know. So point is, based on price action I'm seeing right now, we had a negative December last year. We had a failed Santa rally. We had one in 2023. This year, I feel like December so far has been positive. The Fed didn't squash the market this year. The market's up after a post-Fed dip, but it was right into this structure. I mean, right in there, that's where the market bounced. And I think that was a pretty decent, like 2+% dip, and the market's taking it back up. If we close at 6,900 or higher, I think the market can start pushing its way up into the 6,900 plus. I do have a pretty significant gamma level. I'll show you here. This is the 31st of December expiration, and you will see where all the positive gamma sits. There's a big one at 6,900, so we're only 25 points away from that right now. And the 7,000 handle, holy crap, that has gone way off the table. So yesterday, this 7,000 handle, this is a 12/31 expiration. So I need to go to this one. There it is. Okay. So let's just point out some flow levels here. This is 6,900, so gettable. 6,925, gettable. 6,950, gettable. 7,000, JP Morgan collar trade, pin priced. Could it be pinned? Could it be tested? Headline reads S&P to 7,000 all-time highs. Whether it stays there or not doesn't matter. It's do we get there? So to your question on timing, it's like I could see the market flowing its way into some all-time highs into these next couple of weeks. New positioning will kind of kick off in January, maybe some rotation. If we're at all-time highs going into the new year, I'm cautious for some type of correction. Do I want to position for a bearishness? Not necessarily. I just want to have cash at the ready to then start deploying on some type of discount or dip. Whatever that catalyst may be to cause the dip, I'll just be kind of patiently waiting, and we'll have sessions like this and talk about it,
Sure.
But everything looks pretty damn positive going into the end of the year. And as long as there's no major like one-day sell-off, it's like I don't think this market's going to be disrupted by much.
I tend to agree. I think that if you're going to get some volatility, I would imagine it's probably going to get pushed into January. As I kind of doubt, like even though I pointed out like during the low liquidity period, Bank of Japan, if they wanted to do some yen manipulation kind of stuff, I don't think that's very likely because it's kind of a very Grinchy thing to do during Christmas. But also, I think it also probably is. There's probably some decision making that they probably would have to do, and probably wouldn't do it right before Christmas. So
yeah,
I don't know. I'm not the Bank of Japan, but you never know. I just think in general, keep your eye on yields. That is really where I'm going to be watching, because I can't help but think that you have this gold and silver move happening because central banks are cutting interest rates, but the bond markets are revolting. So
agree.
It's a very, very interesting time. That to me is the biggest tail end risk that we could possibly see in markets right now is serious revolting around national debt crisis stuff. Look, I'm generally, I like the story. A lot of tech stocks in the US look incredibly innovative, but they're very expensive. And so something like that coming along starts to seriously disrupt it. So I wouldn't mind pullbacks if we get them. That's kind of my take on it. Chris, I know you got another stream to go to, so I'll kick you out of here. Merry Christmas to you, man, and thanks for coming on the stream today, man.
For sure. See you soon. Thanks, everybody.
See ya. All right, guys. So we do have, I believe we have another streamer coming on here. Just check our schedule. We have got Marco at, we're not here. Marco's not here till 9:30, so we got a little bit of time. Give me 1 second, guys. I'm just going to close my door here because I got my cats. They want to come in and out. Okay. So, with that said, let's take a look at some more charts. Gold still looks good. I'm trailing my stop on this one. I trailed yesterday. I'm going to watch how we're playing here in terms of gold up 0.7%. We're back above the all-time highs. I love the way this candle closed yesterday. But going off of our previous conversation, I don't necessarily love the reasons for why gold is going up, but I am long gold. It is a nice little hedge in the portfolio right now, considering I think there is some worries about national debt stuff. I know I keep talking about that, but that is definitely something that I think is worth keeping an eye on, not necessarily selling everything. And because again, timing is so difficult with those things. We've had national debt worries for 10, 15, 20 years. So I'm not saying it's not a problem. I'm just saying, keep an eye on it. The market will care when it wants to care, and the trends will reflect that. But anyways, silver looks incredible. I would love to be a buyer, but would have to wait for pullbacks. NASDAQ looks pretty range bound for now. I think that if you're going to see the Santa Claus rally, the big spot here for the NAS would be a break through these highs. If you were to see that, then you are probably making your way back towards those prior all-time highs. I'd say that's kind of your level to watch, is this 25,800 on the CFD, NAS 100. Dow Jones looks pretty constructive here, trying to put in another higher low. Watch for this kind of move just to break through the highs. I mean, Dow Jones is pretty close to a all-time high. You're talking about a 1% move higher on the Dow gets us there. So that could very well happen here. If you take a look at the Russell's down 0.53%. So for me on the Russell, I have talked about this. I would love, a 2.5% pullback lower, but I don't know that we're going to get that here in between now and New Year's, just because markets are likely, in my opinion, to do one of two things. They are likely, and this is probably why the Santa Claus rally is so, historically speaking, on average bullish. I think you're either going to see, this is my opinion, I think you're likely to either see a rally or nothing. Okay, I think those are your two likely scenarios. I think you're either to see this or you're likely to see this. But I don't see personally a very strong probability of this. Could it happen? Sure. It's just statistically, it very rarely does during this period of year. This is the strongest period, historically speaking, of the year. I think if you're bearish, most likely you would see stronger selling on higher volume in the new year. That would be my thought. But anyways, I am looking at the indices with generally a bullish perspective. Let's walk through some data. So if I'm looking at EdgeFinder's current setups, let's remove our neutral readings here for a moment. Pound dollar getting a bullish reading. That's interesting. So what we have here, pound Aussie, I am still actually, is that trade doing okay? I have a pound Aussie short position. It's a small one, but I'm curious what's going on with pound Aussie. Okay, yeah, so we're looking okay on GBP AUD. I'm short on this pair. It was a top setup on the EdgeFinder, went short a few days back. we'll see. I may take a partial profit on this one on pound Aussie, but I do like the downside here. It's not the strongest bearish reading. That's what I'm talking about. Potentially taking a little bit off, just take some profits on it. But other ideas here in the currency world, NZD, USD, see some of you guys talking about that. I know Marco is long this one. So shout out Marco, man. This one is doing its thing. Marco is one of the traders that comes on the live stream pretty frequently. He's actually up next in 20 minutes. But he's also a trader within our Discord. So anytime, he's taking trades, etc. Let's see, I'll just show you really quick. So if I go over to spy on what Marco's up to, he was long, let's see, long, yeah, NZD USD. So and look at this. I mean, this is the value you get inside of the group. He's got RBNZ, hawkish, explaining why he's taking the trade, entries, exits, explanations behind each trade. That's what we do inside of the group. If you're not a member of the VIP group and you would like to be, we're doing our holiday discounts right now. Everything is 45% off. It's our biggest discount that we do all year. We extended our Black Friday sale into the end of the year for people who want to take advantage of it. So if you're interested in that, if you want to get access to Marco's trade alerts, my trade alerts, Chris Pulver's trade alerts, we have a VIP group full of verified traders. If that's something that you're interested in, click the link that's just been dropped here in the chat. Take advantage of those holiday discounts by speaking to a support member of our team. And I have to open the door again. Hold on. My cats are driving me crazy, man. They're so frustrating. All right, buddy. Come on. Here you go. So if anybody has cats, they are the most ridiculous creatures. What my cats do is I have a door to my office and they want that door to be open. But if it's open and I don't want to like disturb the rest of my house with, me doing streams and talking about it. But if the door's closed, they immediately get frustrated and want me to open it again. They don't even care, right? They're not walking through it. They're just like chilling. But the second I close the door, they're like, hey, you leave that open. It's ridiculous. Get hamsters. I've never had hamsters. That's an interesting one. My cats are hilarious and they are cursed and they are just, I have 2 all black cats. 1 boy, 1 girl. We'll see. We'll see what happens with this market, man. I mean, again, statistically, you most of the time see the market up during this time. Doesn't guarantee anything though. Dollar index looks pretty weak. A little bit of a lower high coming in here. And a pretty solid close yesterday with GDP numbers coming in better than expected though. We are seeing a little bit of a bounce on the dollar index here this morning, recapturing some of those gains. Interestingly, that higher GDP statistic is causing yields to move higher, which could potentially slightly slash rate cut probabilities. So that's why maybe some aspects, specifically like the Russell, does not like this GDP statistic, because in a weird way, the Russell's like, hey, wait a second, if the economy is stronger than expected, the Fed's not going to cut interest rates as much. And if the Fed's not going to cut interest rates as much, rate sensitive companies that borrow money are going to say, hey, I can't borrow money as cheap. Right. So they want to see what trades you're taking. I have no indices positions. I have a long gold position, GLD. I'm a swing trader, so I don't take like 15 trades a day. I have, trades that I will hold and just let strong trends keep going. So I am long gold. I am nothing on crypto. I have, let's see, what else do I have? I have pound Aussie short. And I have, do I have something else or I have nothing else? I think that's pretty much all I have right now. I have a very, very thin, I have a lot of ideas. Like I'm looking for pullbacks on indices for possible longs, but nothing is quite at position. If I look at Bitcoin, for example, like Bitcoin, the price action I think is suppressed big time because of the whole JGB stuff. Japanese government bonds, right? The yield spiking there, concerns about the carry trade. I mean, if that were to resolve itself and something were to change there to send Bitcoin higher, I mean, Bitcoin, I know the crypto crowd loves to believe in the idea that crypto is somehow independent of the rest of the financial system, but it's absolutely not. It is 110% institutionally controlled at this point. The ETFs have completely, overtaken the crypto world. It is a risk asset, similar to a tech stock. It moves, for the most part, pretty correlated to tech stocks. It's a good indicator of risk sentiment, but it's a wonderful trading vessel for me. But I'm not necessarily like a crypto diehard. I don't really hold anything passively long term in the crypto world, although I have invested in stocks that are exposed to crypto. Like I did really well this year with Robinhood stock, which, let me just check on Robinhood. What's Hood doing these days? It's gone pretty much sideways. It's lower than where I sold it, I believe. No, I think I sold it around current levels. But anyways, I mean, this is a stock, for example, it's very exposed to crypto. But I mean, I find it to be a great trading vessel. I just am not necessarily a crypto hodler. In terms of currency setups, saw pound dollar getting a strong reading on EdgeFinder. Very interesting to see that. Aussie yen also getting a strong reading. There's someone in the chat who's been asking about Aussie yen every day. Aussie yen looks really strong, man. Really, really strong. If we were to get pullbacks on this one, I like the idea of potentially joining the trade. Let me adjust my support levels here a little bit. I have to sneeze. Hold on. I'm trying not to sound blast you guys. So anyways, AJ looks good on a pullback if we were to get it for continuation setups, but not quite a spot where I can take a trade there. Gold we already talked about. I'm already long, just trailing stops. Someone asked about gold again. So I am long gold. I think that if you are watching gold, we're a little bit extended here, but that doesn't mean anything in my opinion. The trend is up. I wouldn't be surprised if we keep going, but we could also see a pullback maybe to this 43.50 level. So my stop loss is deliberately where it is because, I've got my stop initially here. I've moved that stop into profit just below this prior all-time high. So this is my spot, right? If we come down into this area, that's perfectly fine. Pullbacks are normal. Where I would cut the trade, take profits, would be if we failed to hold that 43.50 retest. I would take profits on the position. So in other words, if I wasn't in the trade, or if I was looking to add to the trade, the area I would add to the trade would be 43.50, and which I may do. I have very light positioning right now, and that's typically when I'll add to a trade, is when my positioning across my portfolio is kind of light. So maybe I'll add to the gold trade if we get a pullback. That's not very much of a pullback though, so it wouldn't be like okay, I'm adding a bunch of leverage to my trade. Nothing of that sort. Just potentially add a small additional amount to my trade if we were to get that 43.50 pullback. Stops below would remain where I'm at with that. So I would put, the new trade stop there as well. But I'll watch it. Depends what EdgeFinder says at the same time. What's your outlook going into the new year, Nick? Yeah, good question. So I'll go through it really quick. Let's start with the U.S. economic heat map. By the way, if you don't have EdgeFinder, just a heads up, if you're a fan of the show, if you have some downtime, if you have some time off the next few days, I am telling you, man, or lady, it's a great time to get a copy of EdgeFinder, because every year for the last 10 years, every year during this kind of really quiet downtime, I have done so much of my learning and reflecting and improving during these types of times. I've done years where the market was just completely quiet during this time, done a lot of back testing, spent time with family still, of course, but I'm a market junkie, so I'm always looking at this stuff. So even during down years, I'm like, let me back test a new strategy or learn something. So if you're someone out there and you're like, I've been really wanting to take my macro to the next level. Settle in with a cup of coffee and a new copy of EdgeFinder, buy our stuff, and get going on macro. You're like, wait, this is a sales pitch. This is a one. Somebody said the other day, wait, your live streams are just an infomercial. And I was like, yes, you're correct. Buy the tool. It's worth every penny. If you're looking to improve your macro, that's what this thing does. It helps you with understanding macro fundamentals. If you see the value in trading with macro fundamentals, then yes, this is an infomercial. We are showing you trading with macro and the tools that we use to do it and have built over the last 5 years. 4 years. Actually, we're coming up on the 4th anniversary from when it launched. But yeah, I guess it's like the last 5 years we've been building this thing. What is the symbol / indicator for EdgeFinder? So EdgeFinder is a standalone tool that has been developed by my company over the last 5 years. If you don't have a copy of it, the easiest way is to head over to a1trading.com or just click the link that's been dropped in the chat. If you want to hear about our current holiday discount, it's the biggest discount we do all year long. We also offer payment plans to set up something so that you can get access today at a really low cost and start practicing implementing this into your trading and adding confluence that you may have never had before. Like so many traders they know macro is important, but once you have EdgeFinder, I'm telling you, you will never, ever trade the same way because you're like, oh, wait, I actually have macro fundamentally implemented into my trading. So let's look at this. So GDP statistics came in. We just updated. So the GDP numbers that came out this morning, this is what EdgeFinder did. It looked and it said, we were forecasting for 3.3%. We had 4.3%. We beat by a full 1%, 100 basis point beat. That is crazy. So GDP stats came in very strong. So that gives a bullish impact to the US dollar in our scoring mechanism and bullish impact on the US stock market. Why? Stronger growth means probably stronger earnings growth for companies. So it's bullish for stocks, bullish for dollar. Now, what will go with that is, of course, higher yields, but we also have interest rates factored into the EdgeFinder's scoring matrix. So if higher growth spikes yields too much, it will nullify the reading on stocks. So this thing is really, truly thinking through the data pretty strongly. But anyways, we've had a lot of data here recently. Data generally seems to favor upside for stocks still. Why? Well, because inflation has been really cool, giving the Fed potentially room to cut interest rates. Although GDP statistics coming in strong, I mean, that's just good for the US economy. It's good for the dollar. Dollar has had, dollar's been pretty weak recently. I wouldn't say this is enough to flip me to dollar bullish by itself, but it is certainly something to pay attention to. The idea that, okay, we have strong GDP statistics. If you start to see manufacturing, services, retail sales numbers, look, I am agnostic to direction. I look at the trends of both price and I look at the trends of macro. And that's so freeing, man. Like if you are somebody who, let me explain something. If you are loyal only to trends, you are likely to do better in markets than somebody who is a perma something, right? So if you are permanently bullish on the dollar, or you are permanently bearish on gold, or you are permanently bearish on stocks, or permanently bullish on stocks, that way of thinking can be very dangerous because stocks don't always go up and they don't always go down either. Same thing with gold, same thing with the dollar. The dollar, right? If it wants to just completely flood through the low and you are just a permanent bull on the dollar and you're just choosing to ignore the facts in front of you, that can get you in a ton of trouble. I recently bought EdgeFinder really good. Thank you very much for the support and the kind words. Issue is EdgeFinder changes every hour. It's actually not too quick of a change. It depends now you just want to watch for new data, right? When new data, see this yellow, if this yellow data shows up, you can see these are when score flips may occur. But score flips, I would say, how often is this changing? Probably 2 to 3 times per day, you'd get a little slight move in the score. But usually if you have something that's like very bullish, I mean, I've seen NASDAQ very bullish for like months on end before, right? And that's kind of how it's designed to be, is you don't want to necessarily be flipping bias every other hour. So yeah, I saw EdgeFinder as an investment. It's 100% an investment. It's a tool, right? So if you're treating your trading like a business, think of EdgeFinder as it's like your system. Like it's part of your trading business, to have the right tools. Like if you're like, think of your trading and you are serious about this stuff, you have business costs. You have trading with a brokerage, there's costs every time. Or if you trade with a prop firm, those are business costs. If you trade on TradingView and you choose to pay for TradingView Premium, that is a trading cost. If you buy a back testing software, which I think everyone should buy, Forex Tester. I am sponsored by them, but the stream is not sponsored by them. I think Forex Tester is worth every penny. I do have a discount code if you want that. Maybe, James, if you don't mind, just dropping the link one more time to our our direct message. If you want to speak to our team, we can get you discounts on Forex Tester. I'm a big fan of their stuff. Anyways, if you're treating trading like a business, businesses have expenses. Like learning to trade for free is possible, but at some point, if you take this stuff seriously, the right tools can massively advance you. I have TradingView Premium. I have Forex Tester. Now, I have to be a little transparent here. Because of my influencer status, I get all these things for free, but I would pay for them. Even if I wasn't, an influencer, quote unquote, in the trading space, I would pay for these things. They're worth it. They're worth every penny, because again, they advance my trading and make it so that I can get back to what I'm doing to make money, which is trading, right? So anyways, it's worth every penny to get the right tools if they meet your criteria. Do not buy EdgeFinder. Here's who you shouldn't, this is who should not buy EdgeFinder. You should not buy EdgeFinder if you don't actually see value in fundamental analysis and crowd sentiment analysis. If those things are not really something that you see implementing into your analysis, then do not get the EdgeFinder, because that's what it's for. If you see value in tracking sentiment, economic growth, inflation statistics, jobs market, and implementing those things into your bias on gold, silver, currency pairs, NASDAQ, etc., consider it. But don't get it if you don't see value in those things. The EdgeFinder by itself is not going to magically make your trading super profitable. It's not a holy grail. It's a screener. It's a powerful screener, but it's not a out of the box, I'm a magically profitable trader now just because I bought EdgeFinder. It's a tool. Treat it like a tool, right? So yeah. Nick live streams almost every day. Well, you never know. I might take a couple months off. Sometimes I see that people are like, oh, I'll never buy the EdgeFinder because Nick just streams. So, I'll just follow. And to be fair, hey, if I give you value by you tuning in and seeing some of the stuff coming up from EdgeFinder, that's awesome. But at some point, I think if you're really serious about this stuff, it's sort of like if I don't know. The point is, if you're really serious about this stuff, you should probably have the tools yourself so that you can look in depth at what you want to look at for your own analysis. Love the EdgeFinder, just can't afford it yet. No worries. If you do need a payment plan, if that would make it easier for you, shoot us a message. We can split it up into 3 months of installments so that it's a much lower cost. It's totally up to you. Just send us a direct message if that is what you're interested in. So stock market opens up here in about 5 minutes. Dollar index, again, rebounding off the lows. Yields are higher this morning. Makes sense. GDP statistics. But you just need to, coming back to what we said earlier, man, I think we really have to watch this stuff with yields. The 10-year yield rising despite the dollar index trending lower signals that the market may still be skeptical about, kind of the U.S. circumstance. National debt rising, uncertainty around political stability, et cetera, et cetera. VIX is very, very low, though. So, you still have a market that is, a VIX at 14.4, that's incredibly low. Incredibly low. Watching the EdgeFinder in the streams just makes me want to buy it more. That's the goal. The goal is to show you how useful it is Because at the same time, you might not be able to watch every stream. And if you can only watch it 6 hours after it recorded, scores might have changed. Again, it's just impractical to try and only see EdgeFinder through streams. You can do it. I mean, hey, some people do. All the power to them. But I think the long-term goal is if you really see the value in it, eventually you should get a copy for yourself. So yes, 100%, it is an infomercial. This is a sales pitch. It's a product that I see genuine value in, and I think everyone should purchase. You don't have to, and you can hopefully learn a lot of things just from tuning into the streams. But I wouldn't sell it if I didn't genuinely think it was worth the amount that it's charged at. I mean, Bloomberg Terminal, do you know what? I've talked about this all the time. It's $30,000 for a Bloomberg Terminal per year. EdgeFinder right now during our discount is $770 once. Right? Now I know Bloomberg Terminal is, it's a much more mature product, but to be honest, I think EdgeFinder is easier to use. Bloomberg Terminal is awesome, but it's like super advanced. It's like opening up a space station. Whereas EdgeFinder is intentionally kept simple. I don't ever want EdgeFinder to be so complicated that you open it up and you're like, okay, what planet am I on? Right? Like, I don't want it to be that difficult. I want it to be a product that is easy to use. Anyways, we'll see if the stock market here with the New York session, you're probably going to get some volume today. It's still going to be light volume this whole week, the holiday period. And then I think you have a half day trading tomorrow. So we'll see if any major moves happen. Again, if the Santa Claus rally is going to take place, it's probably going to be today into, well, if it were to happen, it's going to be the seasonal period, today into the first few days of January. If that rally is going to take place, I would imagine we're going to start to see a kickoff here today. But we'll see. Most of the time you do get higher, but you could have a surprise. Gold's pulling back here a little bit. Again, stronger GDP statistics. This makes sense, right? That muted a little bit of the score on gold, as it should, right? So GDP statistics, let me show you this. So if we go under economic growth, let's just do gold really quick, right? So what we're looking at is the algorithm behind EdgeFinder, its readings on gold. So GDP statistics right here came in stronger than expected. That is strong for the dollar, hence weak for gold, right? Inflation statistics, we're getting some positive score though for gold. Inflation's been pretty cool recently. Jobs data has been pretty mixed relative to expectations. Seasonally, it's a strong period for gold. Institutions are long gold. The trend on gold is to the upside. So most factors still favor gold upside. So I still like the trade. Is there a phone app to see top setups for EdgeFinder? Yes. Well, it's not on an app, but you can pull it up. See, this is a browser-based product, so you can pull it up on your phone. And a lot of people do that. I mean, I don't personally love doing stuff on my phone. I'm much more of a desktop person, but I understand some people, they're on the go. So yes, you can pull up EdgeFinder on your phone. Nick, gold is selling, but platinum is actually breaking back out. Can you explain what sets them apart fundamentally? Oh, you're going to let me flex like that? You would really do that for me? I don't trade futures. What is platinum? Is that not? Okay, so platinum's up, gold's down. Oh, you can't do this to me. You cannot. You can't let me flex like this. You cannot let me flex like that. Okay, look. So this is cool. So great question, by the way. LanoFX says, Nick, gold is selling, but platinum is actually breaking back out. Can you explain what sets them apart fundamentally? So GDP, ready? Again, you're letting me flex. GDP came in better than expected. Strong GDP this morning, right? How does that impact gold? We just went through that. It's strong for the dollar. People like economic uncertainty for buying gold, but economic strength is not very attractive for gold, right? So gold, looking right here, right? So we just reflected GDP was strong. That is weak for gold, right? So gold gets a slightly more bearish reading and now we see price action kind of coming down a little bit from this. Platinum, this is why I said you're letting me flex. Platinum gets a positive score from strong GDP. Why? Anyone know? Does anybody know? Why is GDP EdgeFinder scored opposite for platinum than it is for gold? This is advanced. If you get this answer correct, I salute you. You're a beast. Economic growth. Why is that strong for platinum? Anyone know? Boom. Dream high. Aaron, you guys got it. That's so cool. You totally get it. And again, that is why EdgeFinder scores GDP strong for platinum. That's why. It's an industrial metal. Okay? Gold is a precious metal. Platinum is an industrial metal. Platinum is used in things. Economic growth is generally good for a precious metal like platinum. So EdgeFinder has automatically calculated, hey, GDP was strong, is good for platinum. GDP strong is bad for gold. See? Well done. That's awesome. That was impressive. You guys got that right away. It's an industrial metal. So copper, same thing. Copper benefits from stronger GDP, etc. So EdgeFinder, that's what it does, is it reads in the economic data and it automatically, without, we just did that manually. EdgeFinder does it automatically. That's the cool thing about it. And it factors in. Now platinum is getting our strongest reading in terms of metals on the EdgeFinder, which is pretty cool. Anyways, guys, up next, we've got Marco taking over the stream. If you don't have a copy of EdgeFinder, get yourself one. It's 40% off right now. For live stream viewers, we'll do 45% off if you message in right now using the link in the chat. Get yourself a copy for the holidays. Treat yourself, man. It's a tool worth buying if you are somebody who wants to get access to macro in your trading. With that said, here comes Marco just after this quick break. Stay tuned. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. I hope you're doing well. My 2 trades are running nicely. So I opened the buy setup on NZUSD and on the Aussie dollar on Friday last week. And so far they have been doing pretty well. The dollar has been steadily losing value. They are running in decent percentage. I'm still keeping my stop loss at the original position. What I'm looking to see, what I want to see in the markets is I want to see a swing low. So like this. If we form a swing low, I can then place my stop loss below the swing low and trail this position. So that's what I'm looking to see. I'm expecting some strength to continue going into January of the new year, especially because for example, the Aussie dollar is one of the top picks for the big world banks like JP Morgan, Citibank, and Barclays and our banks. So essentially, if you read my report that I attached yesterday, that I showed you yesterday, you would know that most of these big banks like the Aussie, they like the New Zealand and some other currencies. They usually like to get into these big positions at the beginning of the year, so in January. That's why I'm expecting some strength to follow through in January, and that's why I'm planning to hold these positions. On my watch list, I also have gold. So I want to get into a gold buy. The last daily candle has closed above the all-time high, which is a good sign. That's a bullish sign. That's a positive sign. Usually if you get a rejection, the daily candle will try to push above it and then close below it. So that is usually how the daily candle will look if you get a rejection. So this looks pretty healthy. This looks pretty good. Let's check the EdgeFinder as well. Look at the gold. Gold is bullish, getting a bullish reading. What about silver? Silver is getting a bullish reading as well, but I prefer gold. I'm going to let you know why. Essentially, what I'm looking to see is I'm looking for a pullback to the 20 MA. So I believe the 20 MA will continue doing this, and then I can get in somewhere close to the 20 MA, maybe even on a retest of this level. So like the retest of the previous all-time high, because resistance becomes support. That is how trading works. I have an alert set waiting for a pullback. I don't want to get in here. I'm not, it doesn't fit my plan to chase the price to get in at all-time highs. What does fit the plan is to get in on a pullback. Will we get it by the end of this year? Maybe. But what you need to know is usually end of the year is low in volatility. All of the big players, they go on holidays, they take a break, take a vacation, step off the charts. So there's less orders in the market and there is less movement, less volatility. So that is what you can expect. And that's about it. I wanted to say, why am I not focused on silver? So as far as silver goes, I think silver has gone too parabolic. I think it looks too crazy. It kind of looks like Bitcoin. We have been trending higher for quite a while now. I'm sorry, I need to sneeze and I can't sneeze, so I'm suffocating here in the background. But hopefully I'll be able to sneeze a bit later. So what I wanted to say, from January 25 up until now, 136% gain, 136% profit. That's massive. Massive profit. So usually, if you do some backtesting, if silver makes 100% return in a year, usually the next year is break even or a bit negative. Okay, so because silver had such a stellar year in 25, I think 2026 won't be as good. And I think this looks a bit crazy, looks a bit overbought. Well, definitely looks overbought, but it can stay overbought for a long time. It just looks parabolic. It looks like there's massive speculation, massive buying from speculators inside of here, which is not the best thing to see. Gold, on the other hand, gold looks a bit better, looks a bit more tame, looks a bit healthier, still is bullish, still is at all-time highs, but the momentum is not as crazy as silver, where it's just an explosion. This is too erratic, in my opinion. And even if I do try to get in on a pullback, I think if we do get a pullback, it can be 10 to 15%. So we can easily pull back 10 or 15%, and then my tight stop loss is pretty much going to get crushed. So if there is a huge slope to the upside, usually there is a huge crush lower as well. There's a big pullback, big correction, big percentage in the negative, and then you suffer. So gold is my favorite so far, my pick from the metals market, and that's about it for the game plan. One thing that is new to the EdgeFinder, which Nick informed us about, is the real yield history, which is something that I wanted to cover. So the real yield history. What is the real yield? That is basically the interest rate versus the inflation. Okay, so if you look at the yen, JPY, you can see that the yield has been going from very, very negative to minus 2.15, which is still okay. There's still a possible carry trade you can execute by buying the dollar and selling the yen. But it's getting, like, the profit margin is getting smaller and smaller. The Bank of Japan is hiking the rate. Inflation is staying kind of the same in Japan, but essentially, if the BOJ raises the rate even more, and if they tame the inflation, if inflation goes down, this real yield will become maybe zero or maybe even positive, and then the carry trade is no longer valid. The carry trade no longer makes a huge amount of profit, which is something that, if you're watching USD/JPY, this is very, very important. So USD/JPY, just ignore this. Let's lock it and hide it. When looking at the USD/JPY, I was talking about the BOJ last week. We had the interest rate decision. I thought that the rate hike was going to be a big shock to the market, that the carry trade was going to be kind of unwinded, and that UJ will go flying lower like this. That did not happen. Instead, on that Bank of Japan meeting, they were actually more dovish than expected. So they were pretty dovish. They didn't mention any aggressive rate hikes in the future. They didn't mention that they were going to try to tame inflation, while inflation is elevated. So let's take a look. Inflation, CPI. For the JPY, inflation is definitely elevated, but the BOJ does not seem to care that much about it. Going back to the real yield history, you can see they also mentioned the real yield is still pretty negative, and that's definitely true. And that still makes the carry trade work, because in the US you get a positive yield, while in Japan you get a negative yield. So if you buy the dollar, sell the yen, that's how it works. You make money. You make like a passive income by swaps. So it's at minus 2.15%, which is still fine for the carry trade. I think if it goes to minus, let's say, 1% or minus 0.5%, then it's a bit of trouble. But so far, the carry trade is still working. The BOJ is being pretty dovish for forward guidance, which is most important. The actual number with a central bank decision is not the most important. What is most important is the forward guidance. And UJ seems to be gaining some strength. Now, what I have noticed is a representative from Japan. Maybe we can find it on Financial Juice. Let's see. I haven't checked Financial Juice, but I looked at some other sources. Let's see. Market moving. Yeah. So this is it. Japan's finance minister, I think is it the finance minister? I'm not sure. Katayama, we have a free hand to take bold action on the yen. This is pretty important stuff. So this is something you should watch. This is something you should monitor especially if you're trading the USD yen. This is the sort of posts, the sort of announcements that will start coming out when there's a possible intervention coming. So I believe we are actually closer to the intervention levels than we initially thought. From 158 to 162 is definitely a crucial area. So I personally thought it was going to be around 160 to 162, but looks like the crucial area has started to become even 158. So it is very likely now that the BOJ will do an intervention if we go into the 158 or above territory. What you could do is you can try to execute a short setup like this. So just take a sell position if we go above 158, because the chance of an intervention is very, very likely, especially when you get posts like this from Katayama, where they have a free hand to take bold action on the end, blah, blah, blah. They talk in a very funny way. So last time they did an intervention, it was here. So there was a big sell-off right here, okay, in July 2024. This is what can happen during an intervention. Massive momentum, massive liquidity, massive downtrend on USD/JPY, and you do not want to get caught inside of this downtrend. So if you're in some buy positions on USD/JPY, definitely consider taking profits at 158, unwinding your position, because we are now in sort of the red in red alert, in dangerous territory where there is a very, very high chance that the BOJ will do an intervention. If you're wondering why do they do an intervention, it's because to basically take care of their people, their citizens, to make the exchange rate a bit more fair to people from Japan, okay? To kind of balance things out. Is it market manipulation? Yes, of course it is. It's definitely manipulating the markets, but they do it, so we as traders, we need to adjust to what they do. Okay, I do want to take this time to mention the sponsor of today's video. If you haven't been watching these streams, DNA Funded is a sponsor of the A1 show. So if you're looking to get funded, DNA Funded is a great option. If you're looking to expand your trading capital, this is a great company. Now, this is my two-phase funded account. I have 2 trades open right now, a buy on the euro dollar and the buy on the SPX. Both trades are running in some profit, which is nice to see, yes. Unfortunately, I'm down on the account, so I'm in minus 2.1K on the funded account. Haven't had any payouts yet, but hunting for a payout right now. If you want to get funded, with the code A1Live, you can get 25% off any DNA funded challenge. So this company is ran by professionals. It's a direct competitor to the top companies in the space, FTMO, 5%ers, E8 markets. But what is great is you get a 25% off discount. And with the discount, with this code, the price becomes, I would say, the most affordable. From all of the top companies in the space, DNA Fund has the best price with this code right here. And they use TradeLocker for software execution. TradeLocker is amazing. Best software I have ever used, hands down. So that's a big, big plus of why I recommend DNA. So keep up with the streams. Every single live stream, I basically mention DNA. I go through my dashboard. I show you my progress on the challenge and if I got any payouts. So let's see if I can get some payouts. Now, comment time. Let's see. Joshua, welcome to the stream. Cycling Club, hello. Is it a good time to buy NZUSD? Well, I would say this is not a good time. I think we're now a bit overextended. So I think that if you want to get into setups, what fits my plan, it may not fit your plan, but what fits my plan is I like to get into setups around the 20 MA. So when the price is close to the 20 MA, you usually get a fair price. You get a nice entry and you get a nice tight stop loss. So you get a positive reward to risk. If you're buying the crazy highs when the price is overextended, there's a very, very high chance that your stop loss will get hit. Unless you go in with a crazy big stop loss. You can buy here and have the stop loss below this low, let's say, but it's a huge stop loss. Even if the price moves higher, it's going to be very, very tough for you to make percentage on this particular trade. And you pay negative swaps, which we can see in the carry trade scanner, NZD USD. See, so if you're buying, you need to pay negative swaps. You only receive swaps if you sell NZD USD, and it has to do with interest rates. We can also check, let me just see, this is a great new tool with the real yield history. We can take a look at the dollar, so USD, and then I want to see NZD. Okay, let's see NZD, ZD. NZD is actually negative yield. Okay, interesting, because you can see the interest rate is 2.25, while the inflation, the CPI, is 3%. So the real yield is minus 0.75. Pretty interesting stuff. USD JPY is reversing to the upside again. Let's take a look. I mean, maybe on the short term, but I mostly focus on the daily chart. So if you're looking at the 1 hour, yeah, you can say that, but again, I'm focused on the daily chart. On the daily chart, it still looks bullish overall. Definitely does. We're respecting the 20 MA. I think we can hit 158 or more. So I think there's very likely going to be an intervention. I think there's a high chance we go up. And then I also think there's a high chance we get an intervention, especially after a sentence like this from Katayama. And again, it's pretty important, pretty market moving. You can see when he made the statement, UJ actually dropped lower. So that is what's going to happen when they do an actual intervention. But it's going to be much bigger. And it's going to probably happen at around 158 or above. 158 to 160, I would say, is kind of the crucial area. So as I told you, an interesting trade idea could be sell limit at 158 or above, stop loss above 160, and aiming for, let's say, the low of the range. That could be an interesting trade idea. This is, of course, betting that there will be an intervention from the BOJ. And usually, if you do some research, when they do an intervention, the price on USD JPY moves around 2 to 3%. So from this particular trade idea that I just painted here, price would need to move around 2.5% to hit the take profit. So not a bad trade. That can definitely happen. Usually, interventions from BOJ, as I told you, around maybe 3%. That's kind of the average. That's the average movement when they jump into the markets. Marco, your last 3 trades are Euro-Dollar, NZD-USD, and AUD-USD. Are you sure you don't believe in DXY to 95? That is a good question, but I think that's a really crazy target to have. I think it's unrealistic as a target. 95 is here. That's a huge amount that the DXY needs to go to. And I think something needs to be fundamentally broken in the markets. You need to get a crazy fundamental catalyst for the price to go to 95. So for DXY to go to 95. I think more downside could happen, but I think the short-term bottom is in. I think we're not going to go lower than 96.4, something like that. So this support level, I think, should hold. We could go a bit lower. Yes, I'm betting on dollar weakness. I know that, but I don't think it's realistic for us to hit 95. Unless there's a crazy Trump tweet, crazy tariff, crazy announcement, crazy new war, or something else happens. Just Fed cutting rates, I don't think it's enough to push the price to 95. Hello, Sluggy. Welcome to the stream. Robohola, hello. Silver on the 1 minute. I'm not going to do silver on the 1 minute. I don't think it's valuable. AZEN is also long NZD-USD. Great. Platinum is going up because of the bullish capex cycle. Yes, that is a good spot. Damn, platinum. Haven't seen platinum in a while. Platinum just an explosion on the daily chart from the 12th of December, just exploding higher. That's crazy. So this is purely industrial use, I'm guessing. Maybe even some speculation. Probably some speculation in there as well. But platinum definitely benefits from the capex cycle, from the massive spending that these companies are doing from data centers. Platinum is probably used in a lot of tech stuff. I'm not sure. I'm not an expert on it, but it's probably used in a lot of chips and stuff like that. So yeah, just the demand in 2025 for data centers, for AI stuff has drastically exploded higher. Where's your take profit on NZD-USD? I don't have a take profit. I'm just trailing my position. So I don't have a clear take profit in the markets. I have a trailing stop loss. So if the price does decide to go higher, I will trail my stop loss below the swing lows. That's my game plan. And I don't have a fixed take profit set. Will the US allow an intervention? Well, it doesn't really matter what the US allows or doesn't allow. BOJ is going to do it. They have been doing it for a while now. The US was always mad. Nothing changed. BOJ is going to keep doing it, and they're probably going to do it above 158. At least they are kind of warning us about it. So at least we have this to make us prepared to possibly execute a position on this particular announcement, right? So it may be actually good for us traders because they create an extra edge for us that can actually read into what they're saying. USD was a solid trade. I just went long US 30. Marco, is it a bad idea? I haven't really checked out the US 30. If you don't have a clear trade plan, if you didn't do your back testing, if you didn't do any forward testing, if you are not sure what your edge is, what your trading edge is, I would close the position. I would first develop my edge, develop my strategy, and then jump into the markets. Because if you have no edge, if you didn't do any back testing or any forward testing, it's purely gambling, and it's not gonna go well. Personally, my opinion on the stock market, on the US stock market right now, I'm waiting to see the SPX or the NASDAQ go into all-time highs. Until it happens, I'll be patient. I think it's kind of a no man's land here. Yes, we get a bit of a Santa rally, but I would say until we break above the all-time high, until we break higher, especially on the NASDAQ, because I do prefer the NASDAQ for entries, until we break higher, it's a no trade for me. What are your thoughts on the USB CAD? USB-C or USB-A or USB CAD? I think you're wondering about USD CAD. USD CAD. I'm actually starting to become a bull on the CAD for 2026, possibly. I'm looking into it, but I think the CAD is gaining value, and the dollar is definitely expected to be a bit weaker in the future. Okay, so I think buying the CAD, selling the dollar may not be such a bad idea. Okay, just a second. Just 1 second. Okay, so we have Santa Claus coming in 2 minutes, so make sure you guys are prepared and make sure you stay on the stream. So let's do a couple more comments. Everyone thinks there's going to be an intervention. Makes me think they won't do it. They'll do it. If price goes up, they'll do it. They don't give a beep. So they'll definitely go in. If we go above 158 or if we hit 160, they're going to go in. Yeah, Santa coming in 1 minute. So USD SEK Swedish krona is the first currency used in calculating the DXY, but has broken its extreme low. Once $0 takes its high, then start believing. USD SEK, USD Swedish krona. Haven't checked this one out. Yeah, it broke a key level of support. You are correct. Interesting to see that. Actually, the Swedish krona is expected to be pretty strong in 26. A lot of the big banks have the Swedish krona as a bullish reading, and they're probably going to be buying it in January. So this is a pretty interesting development for the Swedish krona. Thank you for basically putting a comment on this. So just a quick summary. My watch list, I have gold. I'm looking to buy on a pullback around the 20 MA. I'll get in. I'm looking for an entry. NZUSD, I'm in a trade looking to trail my stop loss. I don't have a take profit. Aussie dollar, I'm in a trade looking to trail the stop loss, and I also don't have a take profit. We are approaching some pretty significant level of resistance. Have a Merry Christmas. I will see you guys, I believe, on Friday, but I won't see you in the next 2 days. So I wish you a Merry Christmas, Happy Holidays. Thank you very much for watching. Good luck in 2026. I wish you all the best. And if you want to trade with us, make sure you join the A1 Trading Discord with the code Marco. So see you guys in the Friday stream. Goodbye.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello, how's everyone doing? Merry Christmas. So I'm not going to be here for too long because I'll be honest, I'm about 5 glasses of wine deep and I'm completely clocked out for the year. But I thought I'd come on, I'd say hello, I'd wish you all a Merry Christmas and see how everyone's doing. So Sluggy, good to see you, my friend. Also, this is the most itchy thing I've ever worn. It's horrible. So I don't know how Santa does it. So what have I got going? We've got Euro Pound still sat in this one. We have got silver. So I'll go into silver a bit more in a second. We've got Aussie New Zealand. I'm still in pound Swiss, which again, I've been sat in this one for a little while. And I've also got the NASDAQ long position running. Again, I'll go into the NASDAQ in a second. So I'm not going to go into all the fundamentals on silver. I think we should all be completely aware of what's going on with metals and silver, with industrial demand, AI, EVs, etc. So what I'm doing with silver is a very, very low risk DCA approach, basically just layering in positions every $2 increments, very small position sizes. And my cats have decided to come up and start playing. I apologize if you can hear background noise. So 0.01 positions, and then it goes down and increases to 0.02 just to avoid a top heavy position, which means obviously if we see silver end up coming down to 50, 45, 40, at least the drawdown's not going to be really anything to worry about. So I've got an average price on silver currently at 63, give or take. So yeah, that's pretty much it. So far, so good. There's not really much else to talk about. I'm looking to hold silver really for as long as possible. I'd like to see silver towards $100. So yeah, we'll see when that happens. But yeah, there's not really much else to discuss there. So the NASDAQ. So I did have a position on the S&P. I had, I think, 3 positions, very similar to silver, actually. It was more of just a long-term DCA, but I wanted to liquidate that one. So I took around 1.5% profit on the S&P, nothing too crazy, but I wanted to reallocate into 2026. So I decided to go in for the NASDAQ. So I wanted a bit more tech exposure, specifically tech, not general stocks like the S&P. So the NASDAQ, I'm going to do the same thing. I'm just going to scale in on dips and just buy, and keep it very, very straightforward and very simple. The pound Swiss is more of an expression of a long-term expectation I've got on the UK. Again, we've covered all of this. We did, or I held a very specific webinar with the A1 guys talking about the UK. So again, I'm not going to go into that in too much detail, but I am a bear on the UK and the pound specifically. So I'm going to continue shorting pound Swiss as we, or if we end up coming higher. Aussie New Zealand. To be honest, this isn't my trade. This was from one of my traders, Italy traders. So I'm just going to let this one run. And Euro Pound was my trade. I think Euro Pound is completely supported fundamentally. Again, bearish on the pound or on the UK economy. And Europe seems to be relatively stable. The central bank, or the European Central Bank, is pretty, what's the word? I've lost the trail of thought there. The Bank of, not Bank of England, the European Central Bank seems, I guess, stable. I think I've said stable about 12 times there, but there you go. You saw my story, Sluggy? Yes, it was a good glass of wine. I've got a general rule with wine. I don't buy expensive ones. I'm quite happy with a, you know, like a $50 bottle will do me. I'm not really that picky. Anyway, we're not going to go into the wine conversation. Santa, I'm long on New Zealand US dollar. Am I on the naughty list? No, you are on the nice list, actually. New Zealand US dollar, I'm going to be completely upfront and completely honest. I've got no idea what is going on in the markets right now. So I clocked off. When I say clocked off, I basically just exited the markets and went on holiday mode about a week ago. So in terms of like recent fundamentals or if anything's changed, I've got no idea. That's what the new year's for when I start preparing for the second week of January. However, it's not on the EdgeFinder. Euro dollar, last time I checked, was at the top reading on the EdgeFinder. New Zealand dollar's not here. Aussie dollar's not here. So actually, it's looking a little bit bleak. Pound dollar is getting a bullish reading with 5, which is only 1 away from neutral. So not the most, what's the word? Not the most convincing reading, or not the most convincing trade, I should say. But I do think we could see higher prices. You can tell I've had a bit of wine. I apologize. I'm trying to be on my best behavior here. But yeah, anyway, like I said, I'm not going to be here for too long. I just wanted to drop in, say hello, wish you all a Merry Christmas. So if there's anything specific you want to ask or talk about, that's completely cool. If not, I'll probably ramble for a little bit longer, and then we'll call it today. These call $50 not expensive. Well, it's in. When I say not expensive, I'm not talking about like personal finance. I'm talking about like the spectrum of wine. You know, you can get bottles of wine for like 100,000. You know, when I say $50 for wine, I'm talking again in sort of the spectrum of wine cost. Does drunk trades count? You know what? I've been very well behaved this year. Actually, I've not touched the market. In fact, no, that's a lie. I did. I took a Microsoft trade. It's not going to be here because it was last week and this is a 5-minute chart. But yeah, I took a Microsoft trade last week on Monday, I think. Got stopped out for 1%. So I was like, you know what? That's my sign. I'm actually done now. So yeah, I've not done anything. I'm still in euro dollar, but I'm not going to show that because I think it's going to leave a bad. What's the word? I don't want to influence anyone into any ideas into Christmas because now is my cutoff point. So any trades I've got open, like again, all the ones I've just shown you on Aussie, New Zealand, Pound Swiss, etc., they're more just hold. You know, there's not really anything for me to do here. Joshua, good to hear it. Shills, good to see you as well. Hope you're well. It's like a 25-liter keg. Well, of wine, definitely not. It's just a bottle. I'm not an alcoholic yet, anyway. James, hi from South Africa. Wish you and the family well. Last time I was here, there were talks of you moving house. Yeah, that's probably a story for another stream. But yeah, it's complicated. So I'm looking at Cyprus, Hungary. I don't know. My living situation has been up in the air for about a year at this point. Any assets fundamental interested for trading? To be honest, no. So the way I look at Christmas is it's the only time of year where I'm completely away from the markets. Birthday, Easter, whatever holidays there are throughout the year that you celebrate, I will be at the charts in some way, whether I'm just keeping up economics or actually on the charts. Christmas is the only time I'm actually like take a full break. So in terms of placing swing trades or any fundamental drivers that are going on, I'm pretty much unaware unless they were pre-existing before December. So the only guide I've really got right now is the EdgeFinder. But in terms of like executing trades, managing trades, it's the same thing. I wouldn't be looking to do it. And it's not even just a personal rule. It's just because the liquidity in the markets is so thin. The movements you're going to get are very likely more on the side of noise rather than a discretionary driven trend or a fundamental driven trend, if that makes sense. So what you could end up doing is placing a trade today, Christmas Eve tomorrow, then you've got Christmas Day, then you've got Boxing Day, then you've got New Year's. That whole time, the markets are just not going to do anything. So unless you're getting paid swaps, it's pointless. So for example, like euro dollar shorts or whatever, if you're getting paid to hold the position, then fine. There is the argument there that you obviously make money on the trade and it's very unlikely to really do that much. yeah, that's just my point of view. Obviously, there are certain things that change. You know, euro dollar or the dollar has had quite a nice move to the downside today. So, you know, take it with a grain of salt, but it's just a general rule I lay out for myself. Enjoy holidays, James. You too, Sluggy. And you, Eisen, I'm sorry if I mispronounced your name there. Only thing that could happen is the yen intervention. Yes, so the yen intervention, let's just pull up the dollar yen chart. Bear with me. Where is it? Here. So yeah, with the yen intervention, I got it wrong last time. So I really thought we were going to see the intervention over the US Thanksgiving. And this is, again, just following that general behavior that we've seen in the past, which is the Ministry of Finance, which is the MOF. They are the ones that do the interventions, not the Bank of Japan. I've seen that misconception before. They intervene during low liquidity periods in the markets. And the reason they do that is so that their intervention has more of an impact. It's more sustained. There's less activity in the markets to buy it back or, you know, mute that move, if that makes sense. So from pretty much today up until, I'd say, the first week of January, we're in a bit of a danger zone there. Again, it could potentially happen. I'm not saying it's definitely going to happen, but that idea is there, which is completely keeping me away from yen pairs. So if you are wanting to trade yen, it's tricky because there's that argument of, yes, we could look for shorts on dollar yen, anticipating that we are going to get the intervention. But then there is also that thing of, actually, we have no evidence. We've got no proof that that intervention is going to take place. And dollar yen is still fundamentally a bullish asset or a bullish pair. The yen remains a funding currency. Yes, they hiked rates, but nothing has actually changed. You know, it's just that interest rate hike, and it's still relatively meaningless. Pet your furry overlord. I will do. Absolutely. Yeah. Anyway, ladies and gentlemen, I think I'm going to call it there. I know it's been a short one. I've been here for 15 minutes or so. But as I said, I'm not really on the market. So again, it was more just to drop in, wish you all a Merry Christmas and say hello, see how everyone's doing. So guys, have a good one. Thank you for having me. I will see you after Christmas, probably in the new year. But yeah, enjoy your holidays. If you don't celebrate Christmas, enjoy the peaceful period. Guys, have a good one. I love you all very much. Merry Christmas. Don't get margin called, and I will see you next year.
Ho, ho, ho. Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.